Good morning. It is time for pre-market PulseScan with yours truly, Dex the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave price trigger system that we put in your hands each and every trading day, Sunday through Friday. What a week it's been. It has been a week to remember, and a week that some people would like to forget. Uh, Man, where do we even start? So the job numbers came out, and as we all know, they like to massage the numbers. They like to play accounting tricks in order to lessen the blow when things are severe. They'll wait a long time down the line and then come out and say, "Oh, here's the real numbers. We found the real numbers." Yeah, we too bad we didn't have them at the time that it was really relevant, but we found them and it's been revised. And yeah, who cares now, right? That's how they do it. They play with the numbers. Case in point, today's number only counted up to mid-April. It didn't even include the entire month like it was supposed to. Why didn't it include the entire month? Because they did not want to cause a riot. Because if they really told you the truth, in their minds, the sheeple will never get it. And even if they do, they'll just go ham in the streets. And we can't have that. We need them to, we need to control their emotions and keep them at a certain level. If we want them high but not too high, we need to release it this way. If we want another response, we want a response where we can dismiss all the negativities. We want to put out a way that we can massage and soothe them. But then they do what they always do. They throw the poor people under the bus and they scapegoat the poor people, just like they did in 2008. They said it was a subprime mortgage crisis. It was not a subprime mortgage crisis. All right. It was an A paper mortgage crisis. But they couldn't say that. They couldn't do that because then they would disappoint all their constituents. They would disappoint the individuals who put them in office. So no, we can't do that because those people have connections and money and power, and we can't risk that. So let's just throw the poor people under the bus. Let's go after the low hanging fruit, those that can't afford lawyers, those that you can abuse and do whatever you want to with, and they can't fight back. They don't have the education, they don't have the knowledge, the information, and they don't have the resources to defend themselves. Therefore, oh, and they also don't have a platform. Therefore, we'll throw them under the bus and put it all on them. Well, that's what they just did with the unemployment number. They said it's your fault, poor people, that the unemployment rate is the way it is. And they said the majority of the layoffs were in the low paying jobs. And they mentioned the restaurants. Again, that's an easy mark because you shut down all the businesses and threaten people with violence if they opened their restaurants or their businesses in certain areas of the country. So it's easy to say, oh, well, the majority of those jobs was all restaurant workers. Okay, so you're trying to tell me that there are 20 million restaurant workers in the country. That's what you want me to believe? Really? And it's funny because they went deeper than that. They broke it down by if you're a high school graduate or a college graduate, and they broke it down also by nationality. First of all, let me explain something to you. There is no way in the world that they know for a fact who had a college degree, who didn't, who graduated from college, and who didn't. There's no way for them to know that. All right. They can find out to some degree nationality, to some degree. But once again, there's no way for them to know all of that. That is impossible. All right, that is impossible unless they specifically had added some features to the unemployment website. When you go to file that says, we need to know, did you graduate college? Yes or no? Did you graduate high school? Yes or no? Oh, please choose one of these ethnicities. Which one are you? If they did that to every person that filed for unemployment benefits on the website, then they would really know for a fact, plus or minus a couple of percentages, their reports will be absolutely accurate, because they would make it a field on the application that you have to put that on there. So because they don't do that, there's no way in the world for them to know all of that information. So what they do is they run a statistical analysis, and they get that department to crunch some numbers and give them a guesstimate to break it down, so that when they present this to the people, they'll already have their talking points to go along with it. So that's what they do. They pull the wool over your eyes in multiple ways. Not to mention the other dishonest way that they do these jobless claims is by not just massaging the numbers, but massaging the data that you use. So if you take your data sample and make it smaller, then the effects are not as large. But if you took the entire data sample and ran your analysis off of that, it would be 10 times worse. It will make people panic, and you would have all types of things going on. So they had to cheat and say, instead of doing the whole month of April, we're just going to go to mid-April. That's all you need. You don't need nothing else. Like the rest of the month didn't happen. All right. So I'm going to tell you what's going to happen. People are going to digest the number. It's going to be bad. They're going to talk about it all day long. But then next week or the week after that, at some point, they're going to come up with the revised numbers. And it's going to be way worse than the numbers that they put out today. And then by that time, they're hoping that other things would have taken precedent in the news cycle, and it won't be really talked about. They'll just talk about it when the number comes out, and then that'll be it. And they'll be talking about something else. All right, that's how they do it. And they want to sweep certain things under the rug. All right, we're going to get into it, and we're going to analyze this even deeper. But first, let's take a look at these overnight markets that seem to be unaware that there was even an unemployment number that came out. Taking a look at the Dow, it's up 255 points, trading at 24,096. The NASDAQ 100 is up 62 points at 9169 and 3/4. E-mini S&P 500 up 28 and 3/4 points at 2908 and 3/4. Russell is up 20 points, trading at 1305. Bitcoin, the mighty Bitcoin, down $35, trading at 99.75. Overnight high was 10,220. Overnight low, 9,820. Nat gas down a nickel, trading at $1.84. Crude oil is now up 87 cents, trading at $24.42 a barrel after pulling back after hitting the $25 a barrel high, and the overnight low was $23.27. Taking a look now at the long bond, it is now down a full point in 2/32, trading at 180 and 2/32. The gold market is now down $10.80, trading at $1,715 an ounce after pulling back from the overnight high of $1,735.50. We were as low as $1,710.70 before this little technical bounce. Taking a look at silver, silver's up 6 cents, trading at $15.65. Overnight high was $15.94, and the overnight low was $15.50. So silver's trying to maintain a little bit. The big idea for silver, though, is that it has to stay over 15 bucks. Looking at the US dollar index, it is now off by 3 pips, trading at 99.85. It is falling back below par, and the overnight low so far is 99.63, and the high is 99.89. very narrow, very tight trading range for the US dollar coming into Take Back Friday. Looking at the euro is up 5 pips at 108.40. The pound sterling is up 10 pips at 123.69. The Aussie is up 25 pips at 65.13. Canadian is off 32 pips at 139.45. Euro yen is up 48 pips at 115.58. And the dollar yen is up 40 pips at 106.67. Going over to food, beans are up 7.25 points, trading at 851.5. Wow. All right, looks like we have rolled over to the July contract. Okay. Looking at corn, corn is up 2 points at 320. And wheat is up 1.25 points at 523.75. And like I said, we've rolled over to the July contracts and beans, corn, and wheat. All right, so this is Take Back Friday. This is our last pre-market pulse scan for the week. And we're going to see what these markets are truly made of. Let's see here. Let's see. Let's go up here. Give me just a sec. Oh, by the way, drop me a note in the live chat if you were rocking and rolling with these reports this week, especially last night. Everybody who caught that Bitcoin pop, go ahead and drop me a go PulseWaves in the live stream so I can see what's going on. I haven't been too around this week because I've been working on some things which you well know about. All right, let's look at a few important things. So just give me a second. We're going to look at a few important things because I wasn't able to do it for you last night. So I'm going to do it for you now. All right, let's see. Give me that. Take that away. I'm going to run off some things. If you want to write these down, you can feel free to do that. So just give me a second. All right, this should do it. Yep. Okay. In about 2 minutes, I'll have it. I was not able to give you guys the what you call me the intraday price inflection points. I wasn't able to go over that, so we're going to do that now. And we're going to go off of my list that I always go off of. I have a main watch list, and then I have my condensed watch list. I trade off of the condensed watch list, but I compile my big watch list. But day in and day out, I'm only using the condensed version to place my trades. And for those of you that took a look at that last night, you saw a couple things on there. All right, let's see here. Okay, we're done. All right, let's knock this out. Let's try to get this over real quick so we can move on. All right, so we'll start with the Forex side, the Canadian dollar. All right, Canadian dollar today, if it is going to want to maintain a bullish sentiment, we need to close above 139.99. That's the Canadian dollar, 139.99. All right, failure to do that would open up much downside potential for next week. All right, looking at the Australian dollar. The Australian dollar right now is a little mixed. All we need to do in the Australian dollar is stay above 63.68, and it can maintain a bullish outlook for next week. All right, the euro yen. In order to put in a short-term bottom, this market needs to close above 114.97. All right, 114.97. Looking at the pound sterling, it needs to close above 123.40. if it wants to put in a short-term bottom. All right, taking a look at the Kiwi, New Zealand dollar. All right, a close above 60.70. A close above that would be bullish, and a close below, I want to say 60.40 would be very bearish. All right, so that's your intraday price inflection points for the New Zealand dollar. Switching over to the Japanese yen, it needs to close above 105.94 if it's going to put in a short-term bottom. 105.94. Taking a look now at, for those that trade vegetables, looking at corn. Corn needs to close above 315 and we'll say 3/4 if it wants to put in a short-term bottom. Looking at soybeans, soybeans needs to close above 838 if it is going to maintain a bullish outlook and put in a short-term bottom. A close below 830 would actually be quite bearish for next week. Looking at wheat, if wheat closes above 528.90, it can maintain a bullish perspective going into next week. All right. However, a close below 511 would be extremely bearish. All right. Looking at the Dow. All right. The Dow futures needs a close above 24,027 if it is going to maintain a bullish outlook going into next week. All right. Failure to do that would have people screaming double top or exhaustion, whatever. And that would open up selling for the Dow for next week. The Bitcoin Futures Composite Index, if it is going to maintain a mad bullish perspective, there is a zone for this. All right, the safety zone or the support zone, or whatever you want to call it, the intraday price inflection point on the Bitcoin Futures Composite Index is as follows. Top side is 10,165. The bottom side of the support is 9,887. All right, it can close anywhere within that zone and maintain a bullish outlook or a bullish perspective for next week. A close below that 98.87 though, and that would be it. That would open the door for massive selling for next week, and the market could possibly, the key word is possibly, drop below 77.23 if enough bears pile on. So just want to throw that out there for you on the Bitcoin Futures Composite Index. Going into the E-mini S&P 500, if it's going to maintain a bullish outlook, it just needs to close above 28.78. Failure to do that would open the door for massive selling. Looking at gold, what does gold need to do? If it's going to maintain a bullish outlook for next week, we need to close above 1735.66. Can we get it? Now, this has a zone. The zone goes down to 1722.10. So as long as the market can close above 1722.10, then it can maintain a bullish perspective. Failure to do that, all right, a close below 1722.10 is wide open bearish for next week, and we could see a drop down to the 1674 handle in gold for next week. I know, spooky, isn't it? Looking at nat gas needs a close above $1.90 to maintain a bullish outlook. Okay, a close below that would actually be very bearish. The NASDAQ 100, the strong monster, it just needs to close above 91.35. If it can do that, it maintains a super bullish outlook for next week. But it goes all the way down to the support zone of 9,081 and 3/4. So 90.81 and 3/4 is the bottom of the support zone for the NASDAQ 100. Failure to do that, you know what it is. All right, crude oil. If this oil is going to continue to bounce, it needs a solid close today above $23.79. If we can't get it, this thing is probably going to start the next cycle of selling for next week. Looking into the Russell, my hustle. Russell right now, it really needs a close above 1279. Not a lot to ask for here. 1279.2. Failure to do that would open the selling door for the Russell. As far as silver, and this is our last one. Silver needs a close today above $15.51. All right, it's going to have to do it. It's going to have to do it. If it does not, I'm afraid it will open the door for selling for next week. All right. So that is our roll call for today. I normally give those out on Thursday night, but because we were still running algos, I was unable to get you those numbers. So I wanted to go ahead and do that solid and get that out the way right now so we wouldn't have to worry about it. All right, so those are the numbers. If you missed any number, you'll just have to wait to the end of this live and go back and replay it so you can write those down, because those are key intraday price inflection points for each market that I just gave it to you in. All right. Excuse me. All right. There's our opening bell. Wow, look at the timing of this. Okay. All right. Let's see here. Give me just a second. It has been brought to my attention that I have missed something. So let me go back. Let me take a look. Let me take a looky. All right. I missed the euro. Okay, so the euro needs a close today above 108.20. 108.20 if it wants to put in a short-term bottom and open the door for a bull run for next week. All right, so 108.20 is your euro. All right. All right, now we can move on because we need to talk, because this, I believe, is going to affect not only what happens in the market today, but it's going to really affect, I believe, our crypto market over the weekend. And I know a lot of you like to pop your way through your open positions into the weekend. So this is for you. Like I said, you know, even if you know what a report is going to be talking about, it's hard to say what the market response is going to be. All right. Okay. For those of you that had a nice week in Forex, right? I'm really happy for you on that one. That's what's up. Keep it going. You should have an even nicer week next week in that as well. I'm going to be I need to test something. So when you go to your Forex folders, you might see the price. Like, let's say, let's use the euro for an example. You may see the euro in there twice, and there's going to be a reason for that. I'm running a test. If I told you what I was doing ahead of time, it might cause some people to be like, hey, but you know what? So what? Let's go ahead and do it. Y'all ready? All right, I'm running a test of ONA. I'm testing ONA. I'm running a test. And I think I figured out why some of us have been having some issues as of late. Frank and I did, learn something about their order placement platform, and we gave you some videos for it. So now I'm working on a specific coding situation for O&A. I'm trying to be politically correct. I think I figured out their specific algorithm for their order book technology that they're using. And I think I'm going to go ahead and I figured out a way to pimp that, but I'm going to need to see if I got it right. So I need to do some forward testing on it. So I'm going to put that in your, I'm going to put it in each Forex folder. So for those of you that got the 6-pack, I'm going to, instead of those 3, it's going to be 6 because I'm going to put both of them in there twice. You'll know the other one because it'll say Forex in brackets followed by the name of it. All right, this is going to be very important. I need everyone's feedback next week. Everyone who trades the Forex, I'm going to need your feedback. It's going to be imperative. Okay? So please, let's give me that feedback. Starting Sunday night, you're going to see the difference because I need to test something with the O&A algorithm. I do believe that I have found something that they're doing that's new, and I think the PulseWave price triggers will be able to pimp it even more effectively than in what it's already doing. All right, so I'll need your feedback, and this will help us moving forward. Not all order desks use necessarily the same type of technology, even though it's pretty much all standard and the same. But because I don't know if I ever explained this to you guys, but when you're trading Forex, especially like micro Forex or whatever, just any Forex, for the most part, you're dealing with an interbook. It's almost like a simulator, like simulated trading in a sense, because you're not technically going into the real market, because the real Forex market is a humongous market that's for the most part really done between banks. So it's almost like a game simulation type thing, where they go by what's going on in the real interbank market, but you're not actually placed in the market. You're placed into a system, a platform that matches other people, and it's weird. It's hard to explain, but anyway, I think I have found a anomaly, if you will, in that, and I think we'll be able to do quite well with it. So, like I said, I just need your feedback. Let me know if you're noticing any changes in your orders. It's going to be important, very important, because like I told you, what happened to me in the cotton pit, it could happen to me again at O&A, and that's why I need to know. I'll need to know if anyone's noticing any changes or anything. Okay, but we're gonna have some fun this week in the Forex market. I just thought I'd throw that out there to you. All right, we're gonna have some fun. Trust me, it's gonna be a lot of fun. All right, with that being said, folks, let's get into it because we really need to look at the truth behind the numbers that came out today, because it does affect a lot of things moving forward, even though they want to lead you to believe that it doesn't and that they have everything under control. No need to panic. It's just the poor people who are suffering. It's all good. Us middle classers and upper middle classers, we're doing great. Blah, 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 blah. Wah, 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 wah. That's all you're hearing. Worst jobs report in history. 20.5 million jobs lost as unemployment rate hits record 14.7%. Stop right there. How can it be 20.5 million? Somebody can't count, because we've been looking at the weekly numbers and we added it up, and by our estimates, and this is on the conservative front, it's 30 million. All right, give or take a few mil. How you getting 20.5? I have no idea. I have no idea. No idea. So I don't know what's up. I don't know. I don't know what to tell you. While economic fundamentals ceased to matter about a month ago, when the Fed went nuclear and not only injected trillions in the bond and repo market, but also directly backstopped the corporate bond market, with many expecting it to do the same in equities. There is something utterly surreal and terrifying watching futures equity surge as the U.S. reports its worst job report in the history. Stop right there. Excuse me. Take a drink. All right, that's facts. That's facts. When that report came out, the market maintained a bullish tone. It was already rallying into the report, and then when it got there, it maintained a bullish perspective. All right, so let's see here. Okay, so this is the biggest number in history. It's 10 times more than the 2 million jobs lost at the peak of the Great Depression. All right. Someone has a question. Didn't the futures dollar index go negative for a first time? If yes, we're headed for negative interest rates like Europe. No, the US dollar index did not go negative or go to zero. When you say negative, okay, I see what you're saying. Like, was it down on the day? Yeah, remember what I was giving you the intraday price inflection points a few moments ago? I told you that the euro was off by a few, like 3 pips or something like that. But yeah, that's not a big deal because it's still hovering between par and 99. So that's not a big issue. Now, if the dollar would have fell by full points and not pips but points, then yeah, because we did have that a while back when the dollar was like off on like 2 points and whatnot. But nah. And as far as interest rates, I think, Mike, that it is definitely we did see negative interest rates. We have seen that this year. Yes, we have. But having it officially across the board where it's not moving and sticking, I think that's in the future yet to come. Okay. Similarly, the unemployment rate, which just a few short months ago was at a 50-year low of 3.5%, exploded to the highest on record, surging to 14.7%. All right. Now, again, that was incredible because we're talking about the biggest in history. All right. The change in total non-farm payroll employment for February was revised down by 45,000 from 275,000 to 230,000. And the change for March was revised down by 169,000 from 701,000 to 870,000. With these revisions, unemployment changes in February and March combined were 214,000 lower than previously reported, but in the context of the 20.5 million print, this is completely irrelevant. And we also know that their math is off because they didn't do the whole month of April. They only did half of the month. Really? When do you ever do that? Come on. Come on. Similarly, the unemployment rate, which just a few months ago was at 50-year low of 3.55%, exploded to the highest on record, surging by 10.3% to 14.7%, modestly below the 16% expected. This is the highest rate and the largest over-the-month increase in the history of the series. Seasonally adjusted data are available back to January of 1948. The number of unemployed persons rose by 15.9 million to 23.1 million in April, reflecting the effects of the coronavirus pandemic. No, it's reflecting the effects of mismanagement of government and shutting down the economy. You didn't shut down the economy during the beginning of the AIDS epidemic. You didn't shut down the economy over SARS or H1N1. You didn't do it for any of those situations, but you're doing it for this one. And the broader underemployment rate also soared. The BLS was quick to point out the impact of the coronavirus on the jobs report. No, the BLS was quick to point out the impact of shutting down the economy, which was done in haste and was a whack move. All right. That's like catching a splinter in your toe, so you hack off your foot. It's ridiculous. Due to the impact of the COVID-19 pandemic, the relationship between the two was no longer stable in April. Therefore, the established survey made modifications to the birth-death model. See? They made modifications. You shouldn't have to do all of that if you were being truthful and honest with the math. If the workers who were recorded as employed but absent from work due to other reasons over and above the number absent for other reasons in a typical April had been classified as unemployed or temporarily laid off, the overall unemployment rate would have been almost 5 percentage points higher than reported on a not seasonally adjusted basis. See how they play with the math? Didn't I say that? They're massaging the numbers. In other words, the real unemployment rate was about 20%. In any case, breaking the goal seek number down, the Hispanic unemployment rate surged the most and is now higher than that for blacks. First of all, Hispanic is not a nationality. You know, that's not a I don't like that word. All right. If you come from Uruguay, you're not Hispanic. All right. If you come from Argentina, you're not Hispanic. You say I'm Argentinian. So I don't like that. And black, the last time I checked, black was not a nationality either. Can you show me, can you point to the country called black on the map? No, you can't. The number of unemployed persons who reported being on temporary layoff increased about tenfold to 18.1 million in April. We note that this is self-reported, i.e., these 18 million Americans believe they will get their jobs back within 6 months. The number of permanent job losers increased by 544,000 to 2 million. I don't know what gave them any kind of hope to wish that they will get their jobs back when they've been laid off. Like Mama used to say, wish in one hand and you know what in the other. See which one gets fullest the quickest. I guarantee you it's not the wish hand. Alongside the surge in the unemployment rate, the labor force participation rate plunged by over 3% to 60.2%, the lowest since the early 1970s. While all of these numbers, horrific as they may be, were generally as expected, there was a clear WTF moment when the BLS reported that the average hourly earnings in March soared by 7.9% year on year, smashing expectations of a 3.3% increase. The reason for this surge is that hours worked plunged by 15%, while pay collapsed only 8%, which, while still a record hit to the consumption power of the U.S., who makes up 70% of U.S. GDP, meant that average hourly wages, which are merely a function of hours worked and total pay, actually rose. And despite failing to predict it in advance, economists were quick to goal seek that the number was inflated by disproportionate job losses among the lower wage workers. All right, again, playing games with the math. The truth of the matter is that those in the lower end jobs are working less hours now, all right, which means they're getting paid less, they're making less money. So you take your average poor employed person, the working poor, they used to probably work 2 or 3 jobs. That's probably been whittled down to 1 job if they're lucky. So instead of getting a complete 40 hours a week or 60 hours a week, they're down to 20 hours a week. So they're working less. In April, unemployment rates rose sharply among all major worker groups. The rate was 13.0% for adult men, 15.5% for adult women, 31.9% for teenagers, 14.2% for whites. Again, I don't know a nationality or country called white. 16.7% for blacks. Again, there's no such country called black. Asians were 18.9%. It's again, you're being lazy, trying to lump all Asians together as if they look and sound alike, which is not true. There's no country called Asia. All right. What country are you from, Asia? No. There are multiple countries that this term is referring to very lazily. All right. Again, don't like that one either. The rates for all these groups, with the exception of the one that they call black, even though there is no nationality called black, represents record highs for their respective series. In April, the number of unemployed persons who were jobless less than 5 weeks increased by 10.7 million to 14.3 million, accounting for almost 2/3 of the unemployed. The number of unemployed persons who were jobless 5 to 14 weeks rose by 5.2 million to 7 million. The number of long-term unemployment, those jobless for 27 weeks or more, at 939,000, declined by 225,000 over the month and represented 4.1% of the unemployed. All right, the labor force participation rate decreased by 2.5 percentage points over the month to 60.2%, the lowest rate since January of 1973, when it was 60%. Total employment, as measured by the household survey, fell by 22.4 million to 133.4 million. The employment population ratio at 51.3% dropped by 8.7 percentage points over the month. This is the lowest rate and largest over the month decline in the history of the series. Seasonally adjusted data are available back to 1948. So the number of persons who usually work full-time declined by 15 million over the month, and the number who usually work part-time declined by 7.4 million. Part-time workers accounted for 1/3 of the over the month employment decline. The number of persons at work part-time for economic reasons nearly doubled over the month to 10.9 million. These individuals who would have preferred full-time employment were working part-time because their hours had been reduced or they were unable to find full-time jobs. This group includes persons who usually work full-time and persons who usually work part-time. The number of persons not in the labor force who currently want a job at 9.9 million nearly doubled in April. These individuals were not counted as unemployed because they were not actively looking for work during the last 4 weeks or were unavailable to take a job. See how they play with words and definitions and ratios. The number of persons not in the labor force. Question: what do you call a person who is not employed? You call them unemployed. So why wouldn't you count the number of people who are not employed? Doesn't matter if they're seeking work or not. So you're saying seeking work, even though you haven't found it yet, makes you employed? Not the last time I checked, I don't remember anyone getting paid just for looking for a job. All right, so that doesn't make any sense. Also, the numbers are outright farce, because you shut down the economy. You told people they couldn't go to work. So how are you saying people were working if no one was allowed to go to work except for essential people, like people that work at grocery stores and the hospital? What's up? What's up? See what I'm saying? See how they play with facts and figures? They don't make any, they contradict themselves. Either you shut down the economy and told people they went to work, they were going to get shot, or you didn't. And everyone was working and none of this ever happened. You can't have it both ways. You cannot have it both ways, because what they're saying doesn't add up to the list of bankruptcies I've read to you yesterday. And that was only a small sample of the bankruptcies and the filings. They're not even thinking about all the mom and pop operations. They're only thinking of taking a look at these big, large corporations that are about to go bye-bye. They're all going the way of Toys R Us. The economy is completely and utterly destroyed. Straight up. And this report is not even going there. It's not making any sense whatsoever. All right, but nonetheless, I had to break down the jobless numbers to you because you needed to know what was going on. But now let's get back deeper and reel this back in to what's going on in these markets. In less than an hour, excuse me, the market has pretty much remained stable. We're not even a full hour into trading yet. We still got like 35 minutes left. All right. Very interesting how this is all playing out. This is going to be really interesting. Hold on. All right, let me see. Which way do I want to go next? Okay, let's go here. Then we'll flip over. Okay, today's unemployment rate reflects a closed economy. Though we are very empathetic to those who have lost their jobs, we are also cognizant that many of the 30 million unemployed will return to work once the economy reopening accelerates. And what really matters is how much long-term damage has been done to the economy and American labor force. Nobody knows for certain, as we are all engaged in a guessing game, which will probably be the case until the economic fog begins to burn off in the fall. There will likely be an initial burst of economic activity due to a huge pent-up demand as America opens for business, but the long-term reality will be determined by how much damage and that the lockdown has caused. All right, histories in the field of economics refers to an event in the economy that persists into the future even after the factors that led to the event have been removed. Stocks seem to be expecting a fairly rapid return to normal, as the S&P is only a little over less than 10% from its all-time high. We are not so sanguine, and our priors are the unemployment rate will linger in the low double-digit range for some time. A high stock market and double-digit unemployment is not a good look going into the November presidential election, especially for President Trump, who derives much of his support from his populist and anti-elitist rhetoric. Top 10% of households own 88% of stock wealth. The elites, or let's say the top 10% of households, for example, own 88% of stock market's wealth. And a stock market clinging close to its highs with an unemployment rate that has nearly tripled will reopen the wounds of the great financial crisis that the fat cats were once again bailed out at the expense of Main Street. The same toxic politics, but this time on steroids, which helped Trump get elected in 2016. This is the second time we've bailed their behinds out, grumbled Joe Biden, the Democratic presidential candidate, last month. The battle over who pays for the fiscal burdens of the pandemic is just beginning. On the present trajectory, a backlash against big business is likely. The most overlooked risk is of a political backlash. The slump will hurt smaller firms and leave the bigger corporate survivors in a stronger position, increasing the concentration of some industries that was already a problem before the pandemic. A crisis demands sacrifice and will leave behind a big bill. The clamor for payback will only grow louder if big business has hogged more than its share of the subsidies on offer. It is easy to imagine windfall taxes on bailed out industries, or a sharp reversal of the steady drop in the stationary federal corporate tax rate, which fell to 21% in 2017 after President Donald Trump's tax reforms, from a long-term average of well over 30%. Some Democrats want to limit mergers and stop firms returning cash to their owners. And that is a quote from The Economist. Moreover, a narrative is beginning to take shape that the Trump administration and his Republicans are more of a Trojan horse for the 1% and Greenwich set. That is, tax cuts for the wealthy and large corporations while cutting social services and healthcare for the middle class, and pumping up and bailing out stocks at the expense of Main Street, where the top 10% directly hold almost 90% of total stock wealth, while the bottom 90% have only a little over 10%. At the same time, the Trump administration presents itself as sort of a dysfunctional honey boo boo reality show to entertain its base, though what some may perceive as a nice circus act, but not quite exactly the savior of the working and middle class that many voted for. So we have a dangerous gap. Finally, to today's cover, The Economist pretty much nails it and also frets how divorced financial markets are from the current and coming economic reality. And that is a very, very deep point. But here's the scary part. Remember what I said to you guys yesterday? How, the big banks have a lot of really smart, high-powered economists working for them. All right. Well, here you go. Professor, economic impact of lockdown will cause more deaths than COVID-19. Lions and tigers and bears. Oh my. No, don't stop. Murder. What in the world are they talking about? Peter Nielsen, a professor of internal medicine and epidemiology at Lund University, warns that the economic devastation caused by lockdowns will cause more deaths than the coronavirus itself. He says the economic devastation caused by lockdowns. He didn't say the economic devastation caused by the virus. He said the economic devastation caused by lockdowns. Economic devastation caused by lockdowns. You underline that. Nielsen was commenting on Sweden's approach to coronavirus, which, unlike virtually every other Western country in the world, didn't impose a lockdown to fight COVID-19. He was commenting on Sweden's approach to coronavirus, which, unlike every other Western country in the world, didn't impose a lockdown to fight COVID-19. So this is very interesting. The tactic appears to have worked. With Sweden's R rate of infection being roughly the same as the UK's, a country which did impose a lockdown, the country also now has much more widespread herd immunity and didn't sacrifice its economy, meaning deaths from poverty will be reduced. Opening that he thinks this will prove to be a good strategy in the long run. Professor Nielsen said the approach has succeeded in preventing a spike in unemployment. It's so important to understand that the deaths of COVID-19 will be far less than the deaths caused by societal lockdown when the economy is ruined, said Nielsen. Why? Because of unemployment and all the social problems with it. A bad economy will hurt and kill people in the future. Remember what I said to you guys. You fire a man and tell him that he can't work. You take his job away. And then on his way out the door, you say, oh, by the way, you are not allowed to go get a job working anywhere else either. Well, then you know what that man is going to do. If he's in a place where there is no firearms, he'll just grab the machete, the screwdriver, the scissors, or the baseball bat and go get him some money. It's just how it is. You can ban weapons and all you want. Then he'll just pick up a rock and bash someone's skull in and still eat. All right? He's going to go get his dinner one way or another. All right? Whether that is through burglary, robbery, theft, selling weapons, selling drugs, selling women. He going to sell him something or he going to rob him something. That's the only two options you have given him. Because not only have you taken away the man's job, but then you told him you dare him to go out and get another job. He's not allowed to. No one's going to hire him because you shut down the economy. Don't you think for a minute that people ain't going to go out there and still eat? A desperate man is the most dangerous man on the planet. A desperate man is the most dangerous man on the planet because he has nothing to lose. He's desperate. He has nothing to lose. All right? Nothing to lose. That is a dangerous person. Well, imagine having 30 million desperate men and women. Oh, they're gonna eat. But you, Mr. Government, need to prepare yourself for a breakdown of society and anarchy because you're going to have such a spike in crime like you've never seen in your life. Do you know how many trap houses are going to just go up overnight? All right. Are you kidding? The trap house going to be rocking. Instead of seeing 10 holes on the stroll, you may see 300 on the stroll. And there'll be a battle for whose block this is. You won't be able to drive down the street without seeing a hole on the corner. Because she said, I got babies to feed. I got mouths to feed. All right? You're going to see that happen. I'm telling you. You're going to see more gangs come out. I never heard of that gang before. Who's that? You talking about the Bloods and the Crips? Nah. You talking about the Vice Lords? Nah. Who are you talking about? I'm talking about PLS. PLS, what's that? Yeah, the people who were least likely to succeed. I never heard of that before. Yeah, man, it's like 30 million people in that gang. They're 30 million strong, and they're spread all over the country. They're going ham right now. They just walking into stores and grabbing what they want, and they not running out. They walking out. What? Really? Yeah, is they hard like that? Yeah, they hard, man. That's what you're going to see. You're going to see dudes being like, well, you know what? I think I'm a pimp now. I'm a pimp. So let me go ahead and give me a few women, and we're going to go ahead and make this money. And you're going to see another dude say, you know what, man? I think I'm going to have to sell me some of these drugs. Let me go ahead and build me a trap house, and let's get this popping. Then another group going to say, you know what? Forget the drugs, forget the women. I'm about to run up in this bank. Or I'm about to run up in this corner store. All right. Now, Sling, not the nerd squad, the geek squad, the real geek squad. Because you're going to be shocked. You're going to see these quote unquote middle class suburbanites turn into a life of crime. Now, I'm going to tell you now, you guys need to hear this because some of you are a little clueless. You don't understand what Bruck Man trying to say to you. All right. So this is what's going to happen. No, dude, nah. the city folk ain't gonna be able to run up to the suburbs because the people in the suburbs gonna be running up in the suburbs. They're gonna be competing. The inner city gonna be competing with the suburbs. Are you kidding, man? Let me tell you something. All right, and I'm gonna break y'all off some facts, some knowledge. First of all, financial crimes is probably the most prolific segment of crime in the United States. You will be surprised of the level of sophistication in financial crimes. All right. Identity theft. You got people running some of the most sophisticated schemes that some of you have never even heard of. Okay, case in point. There was a doctor who was running a Medicare scam. He had made up like 1,000 fake patients and was bilking Medicare for millions of dollars a year. It took like a decade before they caught up with this dude. All right, that's just one hustle. There's insurance hustles, very sophisticated hustles. Now these hustles that I'm telling you about, all right, this ain't no white collar hustles. All right, these are people in the hood coming up with these ideas and doing this stuff. All right, yeah, there's a lot of white collar crime, but you'd be surprised with the inner city. Inner city may have them up by a notch. Very sophisticated, and the majority of these financial crimes are done by women, not men. Women are the ones that are getting locked up for the financial crimes, obtaining money under false pretenses, stuff like that. Credit card scams, you got lottery scams, you got medical insurance scams, you got you got auto scams, you got so many different scams. And the way that the people go about doing it is so sophisticated. Things that you and I would have never thought of in a year. We would never come up with these kind of scams. So there's a lot, man. I'm serious. So you're talking about things that you be like, what? That's a scam? That's a hustle? Yeah, it's a hustle. So people already got hustles going on right now. And the hustles have already become more sophisticated. Remember what I told you guys, that the worse an economy gets, the higher the percentage of new scams come up, and they're even more sophisticated because as technology is coming about, people are finding more ways to do that. I'm sure most of you are aware of this is something that happened like in the early 2000s, where criminals were pretending to put up websites. So you would go to Bank of America because you got a Bank of America online banking account, and they would mimic the website, and you would think you're going to your bank account and doing it, but you're really going to theirs and giving them your information. And very sophisticated, extremely sophisticated. They were doing this to a lot of banks and establishments. So they were doing stuff like that. There was another famous one. They made a music video. That's how bad this was. And you know I'm gonna say it. All right, I'm not a racist. Please don't hurt me. But don't forget the Nigerian scams. Dude had and this was a hit song. It was called "I Go Break Your Dollar." And man, the video was hilarious. I go break your dollar. The Nigerian joints was so powerful. They had a laundry list of different types of scams, but the email scam that they had was the most successful. You wouldn't think of it on the surface, but it was highly successful, extremely successful, because they knew who to target. They would target poor people, but not too poor where they couldn't get no money out of them. They knew who was desperate, and so they would really target the elderly. There were so many elderly scams, man. People beating elderly people out of their money. You have what is called grifters. Grifters are highly skilled people. They can impersonate just about anybody. There was TV shows on Netflix about it. This team, they were beasts, man. They could do it. They could do anything they wanted to. I forget the name of the show. It was a female grifter who was a monster, man. And then you had a hacker, and then you had a cat burglar. The way she could contort her body and stuff was incredible. She could steal anything. I don't care how you had it, where you hid it. She was getting up in there. And then you had a dude that could crack any safe, and it didn't matter what kind of safe it was, he could pimp it. So, and then you had the mastermind. You know, you had to have a Lex Luthor of the operation. But these cats was awesome. Now they didn't go around and they were like Robin Hoods. Their thing was to go after corrupt companies and make them suffer. So there's so many, man. There's so many crimes and hustles out there, man. You know what I'm saying? And even that has evolved over the years. A lot of the street gangs started getting involved in prostitution and other things, money laundering and running women, you know, the pimp game. So running trap houses, you know, you got a lot of stuff going on. So you still got gangs, you still got mafia is still alive and well. You got different kind of gangs. You got gangs that come out of different countries that come over here and run their thing. It's a lot of things going on. You still got don't forget the human trafficking thing and the sex trafficking thing. So you got a lot of stuff. There's a lot of hustles going on in the world right now. A lot of hustles. Don't forget the pyramid schemes, you know, the Bernie Madoff thing. You got that going on. So a lot of stuff like that. So all you're going to see, all this is going to do is bring all of that stuff to light. And I'm going to tell you right now, they're not going to be able to keep pace with it. When you got 30 million people out of work, are you kidding me? They're going to have to start putting the military outside of every bank at night because it's going to get, people going to start going ham. Seriously. It's going to get wild. All right. You don't understand what people are, when people are desperate, they do desperate things. All right. Very desperate things. All right. For you dads out there. All right. If your baby girl is one of these people that lost their job, especially if she's single, you better let your daughter come home. Seriously. Let your daughter come home, man. You don't want to see your daughter on the pole. You don't want to see your daughter on the stroll. All right. You know what's coming. The pole or the stroll. All right. Or worse. You don't want that. So let baby girl come home. All right. Now I'm not gonna leave the sons out. Those of you that got sons, your son lost his job, even if he's single. Let your son come home, man. All right. Don't lose your children through this. All right. This country's become so selfish. Imagine what this is gonna look like. You're not gonna recognize this country, y'all. All right. So I'm telling you, it's gonna get on and popping. People are gonna do what they gotta do. You know, women are gonna do what they gotta do. Always. All right. That woman gonna eat, especially if she's attractive. She's gonna eat. She's not gonna starve. Not at all. She's not gonna starve. It's a little bit harder for a dude, but for a female, you know what I'm talking about. It's easier for a female to eat than it is for a dude to eat, especially if she's really attractive. And that's just life. All right. You don't want your daughter going that way. So let her come home, mom and dad. Okay. So yeah, I know, right? They made pole dancing into an exercise. Whatever. Look, I'm not taking anything away from women who work in the profession doing what they got to do. I don't judge what an adult is doing. What consenting adults do. That's not my place. All right. And hey, pole dancing is hard. You have to be in shape to do that. You know what I'm saying? So I'm not going to judge people for doing what they have to do to survive. I would never do that. All right. People do what they got to do. But yes, the love of money is the root of all evil. The love of money, not money itself, but the love of money. But let's be honest too. You know, the scriptures talk about, you know, being so impoverished that you are tempted to go into crime. and do what you're doing. You know, can't think off the top of my head. Old Testament, was it the book of Chronicles or Kings? One of those. It's a prayer. And he was like, Lord, you know, he was asking the Lord to bless him. He said he didn't want to be so poor that he was tempted to sin, and he didn't want to be so rich that he was also tempted to forget his God. I'm paraphrasing. Yeah, it's a prayer in the Old Testament. So anyway, the thought process behind that is that yes, if a person is brought too low, too impoverished, then they're going to be tempted to do what they got to do, even if that's just begging on the street. You know what I'm saying? No one's just going to go into a corner and curl up in the fetal position and just die. People don't normally do that. Yeah, people will be committing suicide, absolutely, but for the most part, people have a fight or flight type of a response, so they're going to go do what they got to do. All right. You know, like I said, an attractive female is going to do what she feels she need to do, even if that means getting a sugar daddy or whatever. She's going to do what she got to do. All right. So I'm just saying, and dudes are going to do what they got to do. I'm just saying, it's just human nature, man. You know, it would be nice if people didn't have to do that, but when people are desperate and they know there's no jobs out there, so you don't even try, don't even go looking, they're gonna do what they got to do. All right. I'm just saying. You know, now of course, people that have more integrity are going to try to do it by legit means, as you know, by any means necessary. They'll wash dishes, they'll scrub floors, they'll clean toilets, they'll try to do whatever they can. But like I said, if you tell a person they can't eat, and then you take away the mode of them being able to eat with the jobs, well, what do you expect? Isn't that to be expected? You know what I'm saying? So whatever. Other countries that start to reopen now may experience a second wave of the virus. So it might be that they have just postponed a severe outbreak. As previously highlighted, a data analyst consortium in South Africa found that the economic consequences of the country's lockdown would lead to 29 times more people dying than the coronavirus itself. Meanwhile, people across the United Kingdom are demanding their own lockdown to be continued indefinitely with the hashtag keep the lockdown trending #1 on Twitter. Wow. My man Paul Joseph Watson tweeted, why not keep the lockdown until 2030? Another 10 years should do it. I mean, there'll be no economy. The outside world will be a Mad Max hellscape. We'll all end up having to survive on squirrels. Half the population will starve, but at least there'll be fewer COVID deaths. Very well said, Paul Joseph Watson. I like how his sarcasm is second to none. Outstanding. I love it. And he's right. He's right. Why stop here? Let's take things to the logical conclusion. You'll have no economy. Everyone will be Mad Max poor. You will literally find yourself in an episode of The Walking Dead. But at least there'll be fewer COVID deaths. So you're saying that you fear COVID so much. COVID is such a Godzilla that you'd rather starve to death and have no economy than catch the COVID. Really? Seriously? Everybody is that shook? I tell you, man, where are the thinkers? Did everybody just lose their minds or what? And then we don't even get to question anything. If you question it, they threaten you with violence. But see, now here's something that, again, here's the contradiction. Now, the people, they're really taking this kind of not serious, but you can't really blame them because of all the stuff. Okay? Companies are far more terrified than they were in 2008. It said companies. It didn't say the people, and it didn't say the government. It said the companies. After aggregating data from Q1 conference calls, one thing appears to be clear. Companies are far more scared now than they were during the global financial crisis. Those were the findings of a new study by the Federal Reserve, which used a machine reading program to look through more than 600 earnings calls that took place last month during the middle of the ongoing global pandemic. Stop right there. I miss nothing. I miss nothing. Did you hear what was just said to you? The Federal Reserve used a machine reading program. What does that mean? So they're telling you there is a machine reading program. Remember how it was said to you years ago that the government reads everyone's emails? And you were probably thinking, how in the world can the government read every single email? They don't even have that many employees to do that. They don't need it. Machine reading program. A machine that reads. You have to feed it something to read. So in this case, it was reading transcripts of all the earnings reports. If it can read transcripts of earnings reports, it can read emails. If it can read emails, it can read text. Something to think about. According to the study, 42% of American non-financial companies are talking about reining in spending and investment. 27% are discussing equity payouts, and 17% are talking about drawing down their lines of credit. This compares to 25%, 11%, and 7% for these figures, respectively. During the worst point of the 2008 recession, the paper states, we find that actions consistent with financial concerns spiked dramatically in April 2020. The share of firms drawing down on credit lines, cutting equity payouts, or cutting investment was 17, 27, and 42%, more than 6.5% standard deviations from their mean values, and 2, 5, and 10%. For comparison, during the peak of the 2008-2009 financial crisis, these numbers peaked at 7, 11, and 25. Economists Andrew Y. Chen and Ji Yang pieced together the data by looking at the number of times senior company officials used keywords and phrases, according to Bloomberg. The paper continues, the dramatic increase in the share of firms taking these actions indicates that financing concerns amid the COVID-19 outbreak are even more severe than they were in 2008. So right here, they're telling you that what we're experiencing right now is more severe than 2008. The Fed estimates that sentiment won't normalize for another year. We think that's an optimistic assertion, especially because the rate at which things normalize, if they even dare to call it that, depends heavily on treatment and vaccine options for COVID-19. Regardless, the results of the study make it clear how big of an impact the pandemic of ensuring economic shutdown have had on corporations across the country. At the same time, unemployment and corporate bankruptcies are far outpacing numbers from 2008 recession, even with the government's massive stimulus plan. And despite the S&P 500 being up more than 25% since March. Folks, if the numbers was 2 million during the Great Depression of the 30s, and we're like 20 times worse than that now with like 30 million people out of work, what does that say about our economic position? If 2 million people unemployed during the Great Depression is a depression, then what are we in right now? That means we are at least in a depression. All right, so that's it. That's all I got. We got a webinar starting at 10:30. All right. So you guys want to go over to PulseWaveTrading.com. You can register for that. You can also sign up. You can click the link that we just put in the live. I hope everyone has a great weekend, and we will get more into this next week. We're going to go deeper next week. Remember the numbers I gave out at the beginning of this, and be vigilant. We'll see what the cryptos do. Remember, they have until Sunday at 6 p.m. Eastern Standard Time to meet their intraday price inflection point goals. Failure for those to do that will also mean that we're going in an opposite direction there too. All right. I'll see the rest of you guys in the trade room, and everyone else I will see on Monday morning's pre-market PulseScan. Everyone have a blessed weekend. Be encouraged. And don't forget to smash that like button. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. I'm out. Peace.